schedule, safe payment schedule. On the date the partners in the ABCD partnership decided to dissolve their partnership, the partners had the following pre-liquidation capital account balances. And then we have partner A, B, C, and D and their capital. A, B, C, and D share residual profits and losses in a 4:3 to 2:1 ratio. Accrued liabilities are at the date of the dissolution total $12,000 and non-cash assets equal $124,800. During the first month of liquidation, assets have a book value of $66,000 and were sold for $37,200. During the second month, assets have a book value of $38,400, sold for $33,600. During the third month, the remaining unsold assets were determined to be worthless. The partners received the maximum allowable payment at the end of each month. Prepare an installment liquidation schedule along with the necessary supporting safe payment schedules. And then we have the schedule down here below. And so we're also going to kind of put some of our calculations for these installments to each partner down below. So I'll try to get it as close as possible so that we can see it all on one screen. So our balances prior to liquidation, we have some of that information that we can go ahead and fill in. Non-cash assets up here for $124,800. Then we have accrued liabilities of $12,000. And then we can also put in the partner capital accounts from here. So we'll put those in the negative 33.6, 49.2, 21.6, and 14.4. Okay, so now we have all of that listed, and we can go ahead and solve for the portion of assets that are cash. And so we'll just do a sum across. So it'll equal sum all right, and I really should have put the parentheses here and put the negative so that it reported in the positive, or we could have used the ABS. Let's do that. Okay. So then the sale of non-cash assets in month 1. And so it says during the first month of liquidation, assets having a book value of $66,000 were sold for $37,200. And so we can put the $37,200 here. The assets were reduced by $66,000. Okay, and the difference of that will be distributed to each partner. So we'll put in here equals parentheses, grab the difference, close parentheses, and we'll put an ABS in front of this as well so that it gives us an absolute number. And then let me make these absolute cell references so that we can then just multiply by the percentage and copy this formula over. And so I just want to go back really quickly so that we can click into this formula. And so we're just saying the difference between the non-cash assets minus the cash and distributing that to each of the owners at their 40, 30, 20, 10 respective rates. And so then we can just do a sum here. Okay, so now the installment to the first distribution to the partners. And so we're going to create a little extra area down here. We'll call it safe payment 1. And I'm going to take from this point and copy it down to here. Oops, and we need to copy just the values so that we have these numbers and can work with them. Oh, I went the wrong way there. Okay. And so what we have to do is at this point, we have to forget this information that we know that later on we get this cash, because we have to do the safest thing, and that is assume that this $58,800 will be sold for 0 and it will be a complete loss. So here we're going to say assume non-cash sold for 0, loss of $58,800. And so if we did that, what would the impact be? And when we come over here, we're going to distribute that $58,800 to each of the partners. So we'll say equals this $58,800, multiply it by their percentages, and make this an absolute cell reference so that we can copy this formula over. Okay, so if that $58,800 non-cash assets was assumed to be sold for 0, then we would distribute that to everybody, and that would leave us with balances of 1,440 to and that's a deficit. So they've gone past their total equity and now have a deficit, whereas the other 3 partners do not have that deficit. So we can't have that. We can't have a deficit. So now we have to, again, we're doing the safe payments. We're assuming the worst case scenario, and the worst case scenario is that partner A is not going to pay their $1,440 into the company, and instead it's going to be allocated to the partners. So now we'll put in the second assumption here. Assume a deficit is allocated to partners. And so we also, if that happened, would have to redistribute their 40% to each of the partners. So let's come over to the side and do that really quickly. So the redistribution of partner A's 40%. Oops, didn't want that down here. Okay, and so to figure this out, it has to stay in the same ratio. So for partner B, C, and D, we would take the current 30% that partner B has and divide that by the total of all 3 of them. And so we get 50%. And then we'll do the same thing where we take 20% and divide that by the total. Definitely didn't need a million decimals there. And then same thing for partner D. Okay, and we can do a quick sum here and confirm that that is 100%. Okay, so now we have these new percentages, and we have to take this 1400 and allocate that between B, C, and D. So here we will say equals this 1400 times these new percentages, 1440 times 33.33, 1440 times 16.67. And then we have to get rid of the deficit here and do a new sum. So we'll say we'll add them together, come across. Sorry, I have to get rid of these. Okay, and so by doing that, we're able to see what the safe payment would be to each of these partners. And so we can pull those up. We want them to all be in the positive, so we'll use the ABS and paste those in here. And we can also do a sum of each of these. For 31,200. And okay, so we have that, and we can also do the double check that that makes sense by saying our 43,200 minus those liabilities, 31,200. So we couldn't distribute more than that, so that makes sense. And now we can just total these down. Okay, now we have the sale of the non-cash assets for the second month, and so we received cash of 33,600. Non-cash assets had a book value of 38,400. And so again, we're going to do that same thing where we do the difference and allocate that to everybody. And I should have done an absolute cell reference so that we can multiply it by the percentage. And we want that in the positive. Okay, now we're going to paste that over. And we can do our totals again. So we're going to paste these all the way across. Okay, so now we have to figure out the installment to distribution, so it's our safe payment number 2. So again, I'm going to just pull this down. So I'm going to copy it, come down a little ways, paste it, just the values. And we're going to call it safe payment 2. And so we need to do the same thing, and this time we're going to assume non-cash sold for 0. So loss of 20,040. And we have to distribute that to the partners. And so we'll say equals 20,040. Lock that in, times 40%. Pull that all the way across and do a sum. Okay, so now we have the distribution for each of the partners, and we see that that doesn't send anybody into a negative, like a deficit. So we can pull up the distributions that we have here. Total across. And so we get that 33,600, and alternatively we can take our 45,600 minus the 12,000 and get that same 33,600, which is the confirmation that we're on the right track. And so we'll go ahead and total down. Okay, so we have totals across the board. Now we have to write off our non-cash assets in month 3. And so we're assuming that these 20,400 left over will just essentially be thrown away. And so we need a negative 20,400, and we're going to distribute that to each of the partners, lock this in, and multiply it by their percentages. And so then we'll do our sum again. And so at this point, we see that all we have left, everything's been zeroed out except our creditors. We owe $12,000, and we have $12,000 cash to pay them with. And so that makes it easy. Our next line is to pay our creditors. So we're going to subtract out that cash and throw it over on the liabilities because we're paying them all off, do our last sum, and we'll get zeros across the board. So that completes this problem. I hope it makes a little bit more sense now that we have the safe payment breakdown for payment 1 and payment 2 down below.